Treasury yields settled below 2 3/4 for the third consecutive Friday. So the market really starting to take a turn to the downside yield-wise as we see the market creating this new range and the idea that we're going to bounce back up into the old, near 3% yield kind of going out the window, despite the fact that the Fed has raised rates up to between 2 1/4 and 2.5. So right now we are starting to see this comfort zone between, say, 255 and 275, as opposed to the old range, which was more like 280 to 3 1/4, where we had spent most of the second half of 2017. Or 2018, excuse me. So right now the market creating a new range, and we're kind of just waiting, biding our time, waiting to see what happens, nearing the top of that range, but not breaking it. So right now, 275 seems to be the line in the sand again, although we're now facing it from the other side. And 255 was that real reach mark. So I don't necessarily call that any kind of a significant technical level, but right now it's just going to help us establish a range, 255 to 275 yield as we head into next week. And if you look at market volatility, it's starting to decline a little bit. We are still elevated to where we saw most of vols for the beginning half of 2018 and moving into the second and maybe third quarter of 2018. But right now they're starting to come off those highs as we make that established range home. So as the market kind of continues to trade down, we get close to 275, then we back off, close to 275 and then back off. Market's very comfortable in that range. We aren't seeing any knee-jerk reactions, nor are we seeing anybody hit the panic button. And that right now is causing volatility to not drop, but decline slightly. And we're seeing that. We've been seeing it pretty much for the last week. And lastly, let's look ahead. What do we have coming out? Well, we've got some earnings news coming out. We've got a flurry of Fed speakers. We've got, the rash of dovishness that we've seen from the Fed, not only through this week's minutes, but prior to this 6 minutes, we saw a number of Fed speakers talk about, concerns, slowing down rate hikes, and also growth. So right now, that could be a continuation that will certainly help us stay below 275. The aforementioned earnings, banks come to the floor. We are going to get bank earnings, and we are going to find out, how the banks have been doing in quarter four. That typically will set the tone for most of earnings season as we move forward. And lastly, let's look at the shutdown. And one thing the shutdown has really caused concern with is our positioning reports from the CFTC. We haven't had one since December 18th, and I think that right now, the positioning wise, we did see a number of shorts exit, get squeezed out on that move late last week. However, we haven't been able to really give you any details about it. Hopefully the CFTC will get their act together and the government shutdown will close, or we'll finish, and we'll have everybody working full time again. But at least till now, it's all going to be estimates as to where the positioning is, and those leverage funds, which have been holding on, I think have started to obviously get out of their shorts, and that's what's another reason why the market is staying and holding here below 275. So right now, Treasury yields remain low, likely to go even lower unless we get that shutdown going, and earnings will certainly set the tone for the weeks ahead.